Guys, this is S&P 500 technical analysis for the week of February 6th, 2023. That is from February 6th, Monday to February 10th, Friday. Now, guys, let's discuss the agenda of this S&P 500 technical analysis. In this, the agenda, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Remember, this is the weekly chart. Weekly chart means the hawk eye view. Means what is the big picture for the entire stock market for 1 week, 2 weeks, for a month, for 2 months, for a quarter, okay, etc. Means for the long term. So weekly chart means the hawk eye view, means the broad picture, right? So then comes, and once again the weekly chart, okay, recently there was this the new development, okay, means there's a crossover in the moving averages. So we will talk about this the new development, because this has happened almost like after 10 months, 10 or 11 months, okay. So we are going to discuss, okay, there's a crossover in the moving averages on the weekly chart. Then comes the second point of the agenda of this S&P 500 technical analysis, and this is the most important point. This is the press conference of the Federal Reserve Chairman. So recently, if you remember, that the Feds have raised the interest rates by 25 bps, and this was after a very long time, means after many months. So earlier, okay, it was 50 bps, then 75 bps, then again 50 bps, and now, okay, it is 25 bps. So a little relief to the entire stock market, right? So we will discuss the tone of the Federal Reserve Chairman, hawkish, dovish, okay, what he has said and what he is expecting in the coming months, and why the Federal Reserve Chairman is saying that there will be no rate cuts, okay, and no pause, okay, in this particular year, in year 2023, right? Then comes the third point of the agenda of this S&P 500 technical analysis, and as usual, okay, the third point is the support and resistance levels. So means these are the support and resistance levels for the S&P 500. So we will talk about, for example, okay, yeah, last week I mentioned 4035, the zone of 4035, then we have 4065, then we have 4100, 4110, then we have 4150, 4160, and 4185. So I told you that no matter what, okay, at first the entire stock market, even in the best case scenario, okay, at first the entire stock market, this the S&P 500 will remain below 4150 or 4160. Okay, now there comes an exceptional case, and that exceptional case will come through only and only because of the Federal Reserve Chairman. Because no company even if the giants means Apple, Amazon, Microsoft has already, okay, it was done. Apple, Amazon, and Google. Yep. So these were the giants. So even if the giants post better than expected earning, then also it is a very heavy strong zone, very heavy strong resistance zone. So even with that kind of exceptional earnings, S&P 500 will not be able to breach. It will be only and only the Federal Reserve Chairman or the comments of the Federal Reserve Chairman, whatever he says. So if that means if something comes like positive from his side, then only there are some chances that the S&P 500 can move up to 4185. Okay, and then we have some other. But because we are anticipating that the S&P 500 will remain, whatever happens, it will close below 4150, 4160 on the weekly chart. This will happen no matter what. And if you notice, it has closed at 4136, and this is below 4150, 4160. This is what we knew, that this is going to happen, right? Now, anyways, so it was only and only this the Federal Reserve Chairman, the comments of the Federal Reserve Chairman, that has helped the entire stock market, this the S&P 500 to move up, and then finally, okay, a gap up open, it moved up, but again it failed 4185. Okay, so this was, okay, as expected. So this is the part of the support and resistance levels, right? Now comes the point number 4 of the agenda of this S&P 500 technical analysis, and now the point number 4 is the SP500 technical analysis on the daily chart. See, this was the weekly chart. Weekly chart means the long term picture, okay, means the big picture, the broad picture, okay, for 2 weeks, 4 weeks, 2 months, 3 months, 6 months, okay. The daily chart means like what is happening on this, okay, the day by day basis, Monday, Tuesday, Wednesday, Thursday, Friday, okay. So means a short term picture. Short term picture means like for 1 to 2 weeks what is happening, that's it, okay. This is the daily chart. So we'll be having this the weekly chart, means the SP500 technical analysis on the weekly chart, and then SP500 technical analysis on the daily chart. So these two analysis, okay, on the different, okay, these are time frames, will help us to get the more accurate picture, or to help us to understand what is most likely going to happen in the S&P 500. And that is the reason, okay, most of the times you will notice that whatever we expect, okay, the SP 500, it gives, that kind of movement, right? Now comes the last point of the agenda of this S&P 500 technical analysis, and the last point is the probable movement of SP 500 from February 6th 2023 to February 10th 2023. So if you remember last week, okay, in my previous S&P 500 technical analysis, I mentioned that if there comes a bearish candle on Monday, then this bearish candle will be formed, or this bearish candle, okay, it will be on purpose. And what will be the objective of formation of the bearish candle? The only objective is to create some room for the entire stock market, for the S&P 500, so that we can get 2, 3, 4, 5 bullish candles. Okay. So we will again deduce or we will talk about the probable movement of the SP 500, okay, for the next week, like what is going to happen on Monday, Tuesday, Wednesday, Thursday, Friday, etc., right? So guys, this is the agenda of this S&P 500 technical analysis. So guys, there is one more thing that I want to mention here, that this SP 500 technical analysis, it contains sections. So there are the multiple sections. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. Whichever section you want to rewatch, you can rewatch. So these sections will help you to navigate through the entire SP 500 technical analysis. And guys, once again, I will recommend that you should watch the entire SP 500 technical analysis, because each and every section is related to the other section. But if for some reason, if you cannot, in that case, there are these sections. Whichever section you want to watch, you can watch, or you can rewatch, or you can skip, okay, as per your convenience. And guys, if you have not yet subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And guys, other than that, let me clear one more thing, that this S&P 500 technical analysis is not a financial advice of any kind, in any form, or in any manner. This SP 500 technical analysis is a generalized technical analysis. That is why whether you are making 100% profits or 500% profits within a day, or you are seeing 20-30% losses within a day, these profit and losses are all yours, because I do not know how you are going to interpret my SP 500 technical analysis, although I try my level best to clear each and everything. But still, I do not know how you are going to interpret my SP 500 technical analysis and how you are going to plan your trades. Now guys, let me give you a brief recap of what we have actually anticipated to happen in the SP 500 in the last week, and what has happened, and what was the accuracy of our previous SP 500 technical analysis. Now, as mentioned in my previous S&P 500 technical analysis, it was very clear that the Monday will decide the fate of the S&P 500 and the entire stock market. Because if there comes a green candle on Monday, this means that just 1 or 2 more green candles and it's done. But if there comes a red candle, in that case, it will simply help to cool down the technicals, and then there will be a resumption in the bullish trend. So this means that if it comes down on Tuesday, and even if it is like minus 0.01% down, okay, on Tuesday, sorry, on Monday, okay, in that case, what will happen, that it will help stochastic RSI to cool down in a manner that from Tuesday onwards, it can give like 1, 2, 3, 4, okay, or even 5 bullish candles, 4 or 5 bullish candles, okay. So if that is the plan, okay, of these the big ones, okay, in that case, they would go for, okay, either a hold on Monday, okay, or a little like this, the bearish movement on Monday, okay, that's it. So that some room can be created for the SP 500 to move up further, okay. So that will be the only objective. So guys, as you have seen, that we knew that there are some good chances that the market movers, the market manipulators, okay, so they can go for a bearish candle, particularly on Monday. And if they forms a bearish candle, in that case, the only objective of forming the bearish candle is to give, or is to create some room to the stock market, to the S&P 500, Dow Jones and the Nasdaq, so that the indices and the entire stock market can move up. this was not possible if there would have the bullish candle, because in that case just one or two, and then by Tuesday the technicals would have been like 100% saturated, and then a bearish fall, a big fall. Okay, so by forming this the bearish candle, so they have simply fulfilled their objective to give this the bullish room to the entire stock market. Okay, so this was it, and this is what we knew, okay, earlier last week. Now guys, let's talk about, okay, this the SP500 technical analysis. So I'm going to discuss the point number 1 of the agenda of this S&P 500 technical analysis, and the point number 1 of the agenda is S&P 500 technical analysis on the weekly chart. So now let's talk about the weekly chart. So guys, we are here, and this is the weekly chart of the S&P 500 index. So in this, the weekly chart of S&P 500 index, okay, so first thing, okay, let me make it very clear that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, only 1 week. Okay, so these are the weekly candles. Okay, now on this the weekly chart, okay, let's first do this technical analysis. So technical analysis, so first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band, because the SP500 has closed in between the upper band of the Bollinger Band and the median of the Bollinger Band. This means that through the Bollinger Bands, S&P 500 is bullish. Now comes the moving averages. Now this is very interesting, because after many months, okay, let me see that last time this the crossover, because this time, okay, there is a bullish crossover in the moving averages. Okay, so last time this the crossover that has happened in on the weekly chart, that crossover was in February, February 2022, and then there was slip and slip. Okay, so now almost after 1 year we have seen a crossover in the moving averages. Okay, finally it is a bullish crossover, bullish. Okay, so because there is a bullish crossover in the moving averages, secondly the S&P 500, it has closed above all of these the moving averages. This means that now finally SP 500 is bullish through the moving averages. Moving averages means EMAs. Okay, so I have some other moving averages also, okay, but we are going to count, okay, or we are going to say, okay, just the EMAs, that's it. So we will discuss the impact of the bullish crossover, okay, in detail. Okay, but for now, let's first, okay, complete the technical analysis. Now comes the Ichimoku cloud. Now if you notice that SP500 is trading inside the Ichimoku cloud, this means that through the Ichimoku cloud, SP500 is neutral, right? Now let's talk about some other technical indicators. So some other technical indicators, we have the MACD. Now, so there is one more, this is the development, okay, a new development, okay, in this the MACD, that finally the MACD, okay, it become positive. See, the signal is still bearish, the signal is still negative, but finally, okay, after many months, okay, again, I think the same like one year, okay, after 1 year MACD, okay, it is finally bullish, technically bullish, but the signal is still bearish. Okay, until the signal becomes bullish, okay, we cannot say that the SP500 has regained its long-term bullish trend. Okay, but now, okay, so these are the two new developments. Number one is the crossover in the moving averages, EMAs, okay, on the weekly chart, and the MACD is now positive on the weekly chart, right? So MACD is more than the signal. MACD is more than the signal. This means again SP500 on the weekly chart is still bullish, okay, through the MACD. So MACD is moving average convergence divergence. Okay, then comes the stochastic RSI. Now if you notice, the K channel is more than the D channel. Both K and D, okay, K is 92 point something and D is 87, okay, or 88, and the K is more than the D. This means that stochastic RSI, okay, it is saying that, or we can simply say that the S&P 500 is bullish through the stochastic RSI, okay, because K is more than the D. Secondly, okay, as of now, I'm not seeing, okay, anything like saturated, but if there comes your another bullish candle, okay, in that case, yes, okay, the stochastic RSI, it may, okay, I'm not confirming, but it may become saturated, and if it becomes saturated, then a fall, a certain 100% a fall in the entire stock market, okay, or in the global stock markets. Okay, So then comes the divergence. Divergence is normal, not a problem. It is not going to create any kind of problem as of now. Then comes the directional momentum. Directional momentum, okay, it is now bullish. Okay, so it has become bullish. Okay, last two candles, I guess. Okay, on these the weekly candles, so directional momentum is bullish. So momentum is also supporting. Okay, this is the bullish trend. Then comes the saturation. As of now on the weekly chart, okay, S&P 500, it is not saturated, not yet saturated. Okay, the first thing is the Bollinger Band. SP500 is clearly bullish through the Bollinger Bands. Then comes the moving averages. So S&P 500 is clearly bullish through the moving averages. Then comes the Ichimoku cloud. SP500 is clearly bearish. SP500 is neutral through the Ichimoku cloud. Then comes the MACD. Because MACD is more than the signal, this means that the S&P 500 is clearly bullish through the MACD. Then comes the stochastic RSI. Because K is more than the D, this means that the S&P 500 index is clearly bullish through the stochastic RSI. Then comes the directional momentum. So so S&P 500 is or it has gained the bullish directional momentum. Okay, so directional momentum, it is supporting the bullish trend. So overall, we can say that now the S&P 500 is 90% bullish on the weekly chart. Clearly 90% bullish, not absolute bullish, because Ichimoku, okay, it is a very strong factor. It is 90% bullish. Right now, even though it is 90% bullish, this bullishness is there only for the short term. As of now, technicals are saying that this bullishness is not for the long term, but it is for the short term. And what will happen in this the short term? It will form a lower high. Okay, once it has formed the lower high, then it will fall. Okay, so this is what is going to happen. Okay, through this the lower high. So until and unless the S&P 500, Nasdaq, and the Dow Jones. Dow Jones, okay, it is already in the long-term bullish, okay. But until and unless the S&P 500 and the Nasdaq both comes this side of the Ichimoku cloud on the weekly chart, we will not say anything like long-term. Nothing like long-term. Means long-term bullish. We will not say long-term bullish. Rather, we will still say that the entire stock market or the S&P 500 is still in the long-term bearish trend. Long-term bearish trend. And this, the upward movement you are seeing, this is only for the short term. So there we have, okay, we only have this the short term bullish trend. It is going to form a lower high, then it will drop and it will regain. This is the bearish trend, and this is how, okay, it works. Long term bearish trend, short term bullish trend, and then long term, and then short term. Okay, this is how, okay, it works. So guys, this is okay, yeah. So one more thing, okay, that I forgot to mention here. Okay, this is the moving averages, the crossover in the moving averages on the weekly chart. What it signifies after 1 year, this has happened after 1 year. So what it means? It means that now there are some good chances that the S&P 500 and the entire stock market can jump into the long-term bullish trend. Okay, but before that, it has to clear the Ichimoku cloud. Okay, 2 consecutive candles. Okay, one is okay, but still okay, we'll wait for the 2 consecutive closings of the Ichimoku cloud. Okay, and then at the same time, okay, this must also happen in the Nasdaq and also in the Dow Jones, because all of these, the S&P 500, Nasdaq, and Dow Jones, okay, all of these the indices, they are interconnected, they are interlinked, because the top companies, these the giants, okay, they are almost the same, okay, in all of these the indices, right? So this crossover in the moving averages, EMAs, okay, it is simply signifying that now there are some good chances that the S&P 500 can move into the long-term bullish trend. Okay, but not yet. Okay. So guys, this was the weekly chart. So this was the S&P 500 technical analysis on the weekly chart. So, and this was the first point of the agenda, right? Now guys, let's talk about the second point of the agenda, and that is the most critical part. And what is that? That is the press conference of the Federal Reserve Chairman. Press conference, okay? And guys, if you have subscribed to my YouTube channel for last many weeks, months, or years, okay, then you know that we have always given this the weightage, the topmost weightage to the press conference or the comments of the Fed chairman. Because the entire stock market, the global stock market, they fear the Fed chairman, they fear the Federal Reserve. Okay, because whatever he says, means whatever the Federal Reserve chairman says, it has, or this thing, okay, his words has the power to supersede or to override whatever is good or bad or worst is happening in the global economy. Whether companies are posting these the extremely bad earnings, but if he says something good, then the entire stock market, okay, will not care about the companies posting bad earnings. It will simply move up. Even though there are giants who are posting, okay, exceptional earnings, some good news everywhere, okay, fantastic. And now the Federal Reserve, okay, chairman, he has said something bearish, something, okay, and he's not happy. He has seen, and he has said something bearish, negative. In that case, forget about, okay, these the positive comments or positive earnings. The entire stock market will come down. Okay, so this is the power. Okay, so this is the power, okay, in his words. So we are going to talk about, okay, this thing in the second point of the agenda. So let's move on to the second point of the agenda of S&P 500 Technical Analysis. That is the press conference of the Federal Reserve Chairman that was there on Wednesday. Guys, now we are going to discuss the second point of the agenda of this SP500 Technical Analysis. That is the press conference of the Federal Reserve Chairman. Okay, and guys, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon, right? So guys, this was my final update to my YouTube community members. Okay, and in this the final update, so I mentioned this thing that as soon as we see inflation has gone bullish again, Feds will be very angry and the entire stock market will lose its pace, means the bullish pace, because the stock market can fight anyone but not the Feds, right? This is clear. Okay, this is what we know. And the Feds can fight anyone but not the inflation. Again, true. And the inflation can fight anyone but not with an exceptionally strong labor market. So what has happened is that yesterday an extraordinary non-farm payroll data was published, and it was like three times, okay, approximately three times, okay, more than what the Wall Street has as originally expected. So this was extraordinary, and this the extraordinary non-farm payrolls data, okay, this simply indicate that the labor market is very strong and people are getting jobs. There are less people, okay, means again this these the jobless, okay, claims, etc. Okay, means for now we can say that the labor market, okay, it is very strong, and people are getting jobs. Okay, there is no scarcity, okay, in this the job market. So there are more jobs available as compared to the job seekers. Okay, jobs available are more than the job seeker. Okay, that is why we have seen, okay, three times this the expected non-farm payroll data. Okay, even the Wall Street failed. Okay, everyone failed, okay, this time. So it was that high. Okay, that means now people are easily able to, okay, they are easily able to get these the jobs, right? And that is the problem. That is the real problem. Okay, that because people are getting the jobs easily. Okay, what it means, this means that people are getting the money. Okay, money is still flowing into the market. Because the money is still flowing in into the market, people, they have the capacity to buy, okay, whatever they want to buy. Okay, so this means that whatever, okay, is causing this the inflation to move up, or whatever is causing the inflation to hold, that or those reasons will still be able to help the inflation to hold. Means inflation is not going to come down, rather be ready to see a reversal, okay, as early as in the month of February. If not in the month of February, then 100% in the month of March. Okay, and what is the technical reason for this? See, this is a technical analysis. Okay, we do not speculate anything, we do not assume, okay, or that kind of thing. We always trust our technicals. Okay, now why I'm saying, okay, a reversal is due, a bullish reversal, and there will be a heavy bullish reversal in the inflation, a very heavy bullish reversal, approximately 10%, okay, or it can jump to 20%, but approximately near about 10%. Okay, so what is actually going to cause this the reversal in this the inflation? This is the stochastic RSI. And if you notice that the stochastic RSI is trading on the criticals 1, 2, 3. Okay, continuously for 3 months it is trading at the critical. This means that because the stochastic RSI, the channels of the stochastic RSI has hit the absolute bottom, okay, even though the inflation, okay, the CPI data last time, okay, it was 6.5, but in terms of the technical, this is the bottom. Okay, now it is still historically we have seen that, okay, it was able to hold for 3, 4 or 5 months. That is why I'm saying that there are chances that we can see a reversal in the month of February itself. Okay, but if this does not happen and if the inflation further comes down, in that case we have the moving average, okay, here. And in terms of the moving average, okay, what the moving average is saying that there might come, okay, a little there's the relief, okay, means a little more relief. A little more relief means approximately 5%, 3%, 3 to 5%. Okay, if that further comes, means if that little relief comes, in that case the inflation will still be trading, okay, inside the moving averages, inside the conflicted zone. Secondly, it will then further saturate, okay, this is the stochastic RSI in that, and in that case, in the month of March, there will be like 95% probability, more than 95% probability that there will be a reversal in the inflation, 10% or so. Okay, see, the longer it takes to reverse this, the reversal will be, you know, that high. For example, if it takes like 1 or 2 additional months, in that case 15 to 20% reversal. If it reverse, if there comes a rebound in the inflation in this month only, in that case this reversal will be around 10% or a bit less than 10%. In the month of March, this will be 15 to 20%. In the month of April, exceptional case, okay, 20 to 25%. Okay, so again, as if it takes, okay, a little longer, in that case you can expect, okay, that kind of reversal, rebound in the inflation. So this is technically true. Okay, we always analyze, okay, these things technically. Now, so we have talked about the technicals, that a reversal is due in the inflation. So this means that the entire stock market is allowed to move up, okay, without any problems, okay, as long as the inflation data is not out, okay, it is not published. Once the inflation data is published, and if there comes like further like a decrease of 2%, 3% or something, okay, this means that now the inflation is trying to rebound. Okay, so now the data is not that 10%, 7%, 8%, 6%, okay, but only 2 or 3%. This means that in the next month, okay, there will be a reversal if there comes a. So what I'm trying to say is that as soon as there comes a reversal, there comes a bullish reversal in the inflation, then it will be the beginning of the bear trend. Again, means again not the beginning but the resumption of the long-term bear trend in the entire stock market, right? So this is again, okay, food prices and everything, okay, it is there. And now guys, yeah, there is one more thing, okay. In my previous S&P 500 technical analysis, okay, a lot of times I have discussed, okay, this is the same thing, that it is the food, okay, the prices of the food, okay, globally that are going to keep the inflation high. Other than that, the Russia and this is the Ukraine war, okay, it has impacted, okay, further the wheat, okay, the production of the wheat, okay. So again, this is other than that, okay, the general food. So now okay, this is the month of February, then March, April, May, okay, and so on. So now there will be, okay, again some droughts, less production of the food, means the food prices will, okay, will further increase. So we can simply say that we are not going to expect any relief from the food side, okay, in the inflation. The see, there are multiple part of the inflation, okay, multiple factors, okay, that affects the inflation, and food and the food items are, okay, this one of the major contributor. So food and the food items, okay, they will remain high. Once again, people are getting the jobs, they have the money to spend, and the producers, they understand that the people, they have the money to spend, so why would they cut the prices? No. Okay, again, the food, the production of the food, milk, okay, each and everything, okay, this is the necessary, not just the food but whatever is necessary, okay, the prices will keep on rising, or the prices will hold there. This the bullish trend, okay, means because people have the money, okay, that's it, that's the reason. And that is the reason, okay, why the Fed chairman, okay, and the Federal Reserve, these the committee members, they are always, okay, they want this to change. They want this, the okay, this, that the jobs available are more than the job seekers. No, they want this to just change, that the jobs available are less than the job seekers. Means there will be more job seekers and less jobs available. And how this can be achieved? This can be achieved only when you further compel, when you force the economy to slow down, heavily, okay, in a manner when the businesses, okay, they are compelled, they are forced to fire the employees. Recently we have heard a lot of news about, okay, Apple, Microsoft, Amazon, okay, even thousands of employees they are firing, okay, but in other sectors they are getting the jobs, okay. So again, businesses, okay, they will simply fire the employees, okay, and then, okay, they will not take the loan. Means again, okay, a lot of stuff that I've already discussed, okay, in my previous S&P 500 technical analysis, okay, many times. Anyways, now let's talk about the Fed chairman. Okay, this is actually the cycle, and this is how the technically, okay, this is true. The bullishness in this, the entire this particularly the inflation, and why I'm saying that technically a reversal is due. Okay, so this is okay. This is how, okay, it works. Now the Fed chairman. So what he has said, the Fed chairman, right? So this was my final update on February 1st to my YouTube community members. Okay. And in my final update, okay, I mentioned, so there were these the two parts. Okay. So the first part was his statement. So statement, okay, there was, okay, no such change, okay, in his statement. The okay, now, yeah, again the same thing, okay, that the Feds are committed to bring down the inflation, okay, back to 2% or below 2%. As of now, it is 6.5%, 3 times of the expected rate. And other than that, okay, when he was asked about this the inflation, then again, okay, he said that he's not sure whether the inflation will come down, okay, to these the levels or not, because he had mentioned that there is one sector that has shown good results in terms of the inflation, that the inflation has cooled down even though the labor market is strong. But the other sector, okay, the inflation is still high. It is still very, very high, and there are no signs that the inflation is going to cool down. So he has said that there are multiple sectors, okay, in this the inflation that are causing the inflation to move up or to hold. That is why, okay, that is why I've said that the food production or the essential item, that is one sector, okay, real estate, that is other sector, okay, it's sector. So these are the sectors, okay. When we look into the sectors, some sectors are saying that the inflation has cooled down, some sectors are saying that the inflation, okay, it is still okay, moving up, right? So we take, okay, this the collective, or we take this the cumulative measure, okay, of this inflation from the different sectors, and then we say, okay, this is the number, right? So again, okay, there was nothing, okay, and yes, once again he has mentioned that there are these the strong labor market conditions, okay, and jobs available and job seeker, etc., etc., right? So the only thing that he has added this time is that that yes, it is possible to achieve this the 2%, okay, inflation, means that it is possible to bring back the inflation below 2% even with the strong, okay, this the labor market conditions, okay. But by the time, okay, he has said this is the new non-farm payroll data, it was not published, okay, because if this would have been published, in that case he might not have said this particular statement, or he might have changed his tone, okay, because this was unexpected. More than 500,000 non-farm payroll data, 3 times, okay, that was expected by, okay, by this the Wall Street, right? Anyways, so once he has read his statement, at that time the SP500, okay, it was trading around 4050, okay. Then came the question and answer session, okay, and this is the most important part. So the very first thing, okay, from the very beginning, okay, he was positive, his tone was positive, okay, and the stock market has noticed his tone, that now he is positive, okay, even though things are bearish, things are negative, whatever he's saying, okay, it is bearish again, that there will be no rate cuts, rather rate hikes, etc., etc., everything was bearish, but his tone was positive, and he was hopeful. He was hopeful that soon the things will improve. It will take a little more time, but soon the things will improve, okay. And because of his tone, the entire stock market started to move up, okay. But it moved up, okay, in its limits, okay. The movement was not that high, like 5 or 10%. It moved up, but in its limit, because whatever he has said, okay, so because whatever he has said, okay, in terms of the numbers, etc., that was all bearish, that was all negative, okay. That was the reason. Tone was positive, but the numbers and everything was bearish or negative, Okay, so this is the combined effect. Okay, we have seen that there was a movement 1%, 2%. Okay, sorry, not 2%, 1.5% movement in the entire stock market, but not like 4 or 5% movement. Right now, he has said that he's not expecting a recession. Okay, indirectly when I think two of the reporters, okay, they have asked this the question about the recession, then he said that he's not expecting a recession. Rather, yes, he's expecting that the economy will move into, okay, a period, okay, or in a sustained period, okay, below average, means below average growth. So there will be a below average growth. Okay, this is what he is expecting, that the economy will further slow down. It will further slow down, and this slowdown in the economy will remain for some time, means for a couple of months. Okay, so he said that he said that he's not expecting a recession, but yes, economy, okay, there will be a below average growth. It will further slow down for the coming months. Okay, labor market condition, he said that the labor market conditions are very, very strong. Okay, and this could be a problem because one of the sector, okay, is saying that that the inflation has come down, but it still means with a strong labor market, but at the same time, okay, inflation is high because of these the strong labor market conditions, right? So then when he was asked about again and again about the projection on inflation and other things, so he clearly said that he doesn't know when the inflation is going to come down, and what as of now what he can say is that that this thing is going to take some time. That's it. Okay. Then what he has mentioned again, see, his tone was positive. So he said that now the things are improving worldwide. Okay, and this is a good news for all. Okay. However, again, there will be a below level growth for a sustained period of time for next couple of months. Okay, there will be growth, but that will be like below the average level. Okay, means economy will further slow down, right? Now, when he was asked about that whether the Feds can go for any rate cuts this year or possible, okay, or possibly possibly a pause, then he said that no. He clearly said that no. This year, Feds are not going to consider any pause or any cuts. Okay, this particular year, this particular year, and then he was asked that what if the inflation data, or what if like all other data, okay, it comes convincing, then what will happen? Then the Fed chairman said that if that comes, then definitely the committee members, okay, they will talk about it, but he is not going to commit, or he's not going to say that there will be any rate cuts or any pause, okay, in the year 2023. That was another reason that even though his tone was positive, okay, but the numbers were negative. That was the reason that the entire stock market moved up, but like 1 to 1.5%. That's it. Okay, not 4% or 5%. So with this the positive tone, okay, what has happened, that the SP500 was able to breach the very, very strong resistance zone, that was 4100 to 4110. It even moved up to 4149, but because so there was a resistance 4150 and 4160, it failed and again it came down, right? So this was what he has discussed. Okay, now the summary, okay, it was the Fed chairman is hopeful that the things will not go bad as everyone anticipated earlier, right? Fed chairman thinks worldwide geopolitical and economic situation is improving, which may or can help the US economy. Okay, other than that, Fed chairman thinks that the 2% inflation is possible even with the strong labor market. Okay, Fed chairman thinks that things will improve but not immediately, which is why there will be a below level growth for some time. Okay, but at the same time he thinks that the economy might not be heading into the recession, rather it will hold. So what if there is not a recession, then what are we going to call it? Okay, we are going to call it as we are simply going to call it as a long term correction. Okay, if not the recession, then the correction. Okay, then the Fed chairman said that even though, okay, he seems positive, but he don't want to take any chances, because what happened in 1980s, 1977 to 1980, 81, okay, there the inflation was very, very high, extremely high, and that forced the government to intervene, and then the government fired the current Fed chairman, hired a new Fed chairman, okay, and then the Fed and the government, they stopped the money supply in the market. Okay, in the open market, they stopped there's the money supply. So there's the limited money available in the market, and that helped to cool down the inflation. Although okay, it put the economy back into this the recession, but it helped to cool down this the recession. Okay, so now this year there will be further rate hikes, okay, like 25 bps, 25 bps, okay, also. But if there comes like again, okay, a reversal in the inflation, okay, in that case, okay, Feds can go for again 50 bps. So in short, Feds are going to do everything to bring back the inflation below 2%. This is their goal. Well, this was Thursday. So on Thursday, what has happened is that the Bank of England has raised the rates by 50 bps because the inflation is still very very high. Okay, in UK. Okay. Now, so earlier the Bank of England, okay, has said that the recession will be very very severe. Okay, very bad. So there will be a bad recession. But now, after raising the rates by 50 bps, okay, this time the Bank of England says that the recession is inevitable. Recession will happen, it will happen. Okay, however, it might not be as worst, okay, as anticipated earlier, right? So from the UK and from the Europe, we are seeing that the recession will be there, no doubt. Recession will be there, and this is what we are saying. Okay, from this the year, okay, 2022. Okay, recession will be there. The only change as of now is that it might not be as worse, okay, as anticipated earlier. Okay, but rather a normal recession, okay, or a great recession. That's it, not a great recession. Okay. Anyway, as of now, guys, once again, everything is good, or everything is expected to remain good as long as there comes no reversal in the inflation. Okay, particularly in US. Okay, this is the ticker, okay, and the ticker is USIRYY. Okay, this is the ticker. As long as there comes no rebound, no reversal in the inflation, everything is okay, everything is normal. Feds will further increase the rate, okay, these interest rates. They will further force the economy to slow down. Okay, means their objective is to make sure that the jobs available and the job seekers, okay, so this gap must be filled. This gap, okay, as of now there are more jobs available, okay, as compared to the job seeker. That is the problem. So they are simply trying to fill this gap, right? But as soon as there comes a reversal, there comes a rebound in the inflation, and if there comes 10 to 20% rebound in the inflation, okay, then this whatever is positive you are seeing in the entire stock market, then there will be, okay, there's the beginning of or resumption of the bear trend, the long-term bear trend. In terms of the S&P 500, will be back to like 3,500, 3,000, and okay, and below. Okay, so this is the thing. And if there comes this the reversal, okay, in that case this will also say that the recession is, and that this the recession is inevitable in the US also. Or in short, we can say that the recession will be there in the global economy no matter what. Okay, so guys, this was the second point of the agenda of this SP500 technical analysis. This was the press conference of the Fed chairman. And guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And guys, other than that, if you want the daily updates, the daily analysis of the S&P 500, each and everything, in that case, you can join my YouTube community. And in order to join my YouTube community, you can simply click on the join button that is there just below the title of this video. Now guys, let's move on to the point number 3 of the agenda of this SP500 technical analysis. And the point number 3 is the support and resistance levels for the S&P 500 in the coming week. That is the week of February 6th. From February 6th, that is Monday, to February 10th, that is Friday. Okay, so we are going to talk about the support and resistance levels for the SP 500. So that is the point number 3 of the agenda. Now guys, we are going to talk about the third point of the agenda of this S&P 500 technical analysis. And the third point is the support and resistance levels for the S&P 500. So this will be for the week of February 6th, that is from February 6th, Monday, to February 10th, Friday. So in this, the support and resistance levels, okay, so I have marked these these are support and resistance levels, and I'm expecting that in the coming week S&P 500 will trade, okay, in these levels only. So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. Now guys, if you notice that in the previous week, this was 4185. 4185. So there are these the two consecutive failures from 4185. What it means? This means that now this 4185 is going to act as a very strong resistance. See, it is and it was historically, okay, it was the historic, it was a very strong resistance for the S&P 500. But this time also, okay, because there are these are two consecutive rejections from 4185. This means that this is going to act as very strong resistance for the SP500, and before SP500 can move up any further, okay, it has to retest and to breach and to close, okay, above this the 4185. And for that to happen, SP500 needs some strong reasons, okay, some good reasons or some strong movement. So that will give some strong movement to the SP500. Now guys, 4185 as of now, okay, then just above 4185, okay, we have 4210, okay, again. So see, again, this is whatever, okay, is mentioned here from 4100 to the golden resistance 4291, okay, this is all important, this is all critical, this is all strong, okay, these are resistances. Now after this the 4185, we have 4210, then we have 4240, okay. So 4210, okay, again, so again, no, not just along, not just the 4210, okay, but also the 4240, okay. So they are the strong one. Then we have 4267. Now comes the most important one and the golden resistance, that is the 4291. This is 4291. Now, what is this, the 4291? 4291 is the golden resistance, and historically we have seen that whenever there came any movement, whether it was the bullish movement or the bearish movement, okay, we have found the S&P 500, the S&P 500 index, it found very strong support, okay, on this the 4291, okay. And the same happened, okay, when it become this the resistance, okay. So this was the support, support, reversal hold, then breach, then it came down, this side bullish, this side bearish, etc. Then it failed, and again, okay, it came down. So, and this time, okay, it breached, then again retest, and then move up. So 4291 is very strong resistance. That is why, okay, we call it as a golden resistance, okay. So as of now, means in the coming week, okay, or so, there are no earnings, okay, no important earnings that can help the SP500 to move up and to breach 4291, okay. Nothing, okay, in terms of the geopolitical, okay, etc. The earliest that can happen, okay, either it will be through the CPI data that is expected to be published by next week, I guess, okay. If that CPI data, okay, if the inflation further cools down, then only so that will be one of the important factors that can help the SP500 to breach, okay, or not just breach but to even breach these the intermediate resistances, and then to reach towards 4291 and then to breach 4291. There are these are two things. Number one, the first thing is to reaching to 4291. It is not that easy, okay. The second thing is breaching and closing above 4291. So these two are very important things here, right? So first of all, SP500 has to put a lot of efforts in order to move up, and once it is able to move up, so that is going to consume some time, okay. So once it is able to move up, then there will be this the second point, means the breach and the closing above, and this is a sustaining above 4291. If not, then again, okay, the same fate, and then from 4291 to 3500, okay. But this time it will be to 3000 itself, okay, not 3500, right? So so we will talk about, okay, this is the candle, okay, and the movement because of this candle in the fifth point of the agenda. But as of now, I'm going to give you, okay, a little idea, okay. This is the probable movement, okay. So now comes the support side. So support side, we have 4110 and 4100. Now if you notice that we have 4160, 4150. Again, SP500 has failed to hold above 4150, 4160. However, it was able to sustain above 4100 and 4110, means 4100 and 4110. What it means? This means that as of now, SP500 is expected to hold, okay, above this the 4100 or 4110, Okay, but if it breaches, okay, in that case we have the next one at 4065. See, any breach or any close below 4000 sorry, 4100 or 4110, any breach or so not just breach but close. Okay, breach, yes, it can breach, but close, any close below 4100 or 4110 will simply signal that now the S&P 500 is not expected to move up. Rather, at first it want to take a break, so first it will take a break, and then after taking that the break, okay, once, okay, these the vacations are over, then it will, okay, then it can resume its bullish trend, okay, if it want to, right? So whenever, okay, it will be taking a break, so that break is at first, okay, is expected to means SP500 must hold above 4100. Okay, failure of that will simply help it to bring to 4000 to the zone of 4035, and we have discussed this, the zone of 4035, again and again, okay, in almost each and every S&P 500 technical analysis. Okay, so it is expected to hold here, that's it. Okay, but anyway, any closing below 4035, okay, means there will be, no resumption, or almost means there will be like now there will be very less chances that there will be any resumption of the bullish trend. Rather, it will simply go bearish. Okay, simple. So we have, okay, then we have 4065 intermediate, okay, support, then we have 4035, then we have 3991, okay, also around 3991 we have the 200-day moving average, okay, again a supporting factor. Then we have the next one is the 3960, okay, this is again a very good support. Then we have a good support, okay, in the zone of 3937, and thereafter and thereafter then we have this, the very good support, okay, this is the boundary of the Chimoku itself. Okay, that's it. So these are the support and resistance level. Now once again, remember the point number 1 and point number 2. Okay, means first it has to move up, first it has to reach to 4291. That itself is not that easy. Okay, now once it reaches, then comes the second heavy task, okay, breach and close and sustain above that. Okay, but as of now, because it has given up, okay, it has even failed to hold above 4150, 4160, so most likely, okay, it is going to hold for at least for a day or two or so. Okay, this is what we are going to cover in the in this fourth point of the fifth point of the agenda, that is a probable movement of the SP500, okay, for the week of February 6th. Okay, and once again, if you are my YouTube community member, okay, then this that on the daily basis, okay, pre-market update, first update, second update, final update, etc. So I will tell you, okay, this is the probable movement each and every day of the S&P 500. Okay, so guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And also, if you want to join my YouTube community, then you can use the join button that is there just below the title of the video, and then you can get the daily analysis, the daily updates of the SP500 from Monday through Friday, each and everything. Okay, so guys, now let's move on to the fourth point of the agenda of this SP500 technical analysis. And the fourth point is the S&P 500 technical analysis on the daily chart. Remember, in the first point we have discussed the weekly chart, the S&P 500 technical analysis on the weekly chart, right? But now we are going to talk about the daily chart. So this will be the S&P 500 technical analysis on the daily chart, right? So let's move on to the fourth point of the agenda. So guys, before we proceed further, I have this important information to share with you regarding the YouTube community, that if you want to get the daily updates, the daily analysis of the SP500 from Monday through Friday, each and everything, pre-market update, first, second, third updates, final update, and then, okay, these the comments of the Fed, means each and everything, then you can join my YouTube community. Okay, now how to join my YouTube community? For that, you need to click on the join button that is there just below the title of this video. So when you click on the join button, then this pop-up will open. Now once this pop-up opens, then you will see that there is this all midweek updates. So what is this, the all midweek updates? All midweek updates means the each and everything from Monday through Friday, all of the updates of the S&P 500 from Monday through Friday. And if you notice that my members, they are getting the updates for last many months, Monday through Friday, each and everything, okay, for last many months. And they know what is expected to happen on a particular day, and then what is expected to happen the next day. So they have joined my YouTube community and they are getting these updates from Monday through Friday, each and everything. So whenever you want to join my YouTube community, you can simply click on this the join button, and you are very welcome. And guys, there is one more thing that once you have joined my YouTube community, then you need to visit my channel, okay, my YouTube channel, and there we have this the community section. So you will find all of my updates here in this the community section itself. And if you have the YouTube app, then you can use the YouTube app and you'll get the notifications, okay. And again there will be this the community section, and you can get all of my updates, okay, through the YouTube app. So guys, now we are going to discuss the fourth point of the agenda, and the fourth point of the agenda of this S&P 500 technical analysis. This is the fourth point is the SP 500 technical analysis on the daily chart. And see, this is the daily chart. Okay, let me write it down. Daily chart. So daily chart means one candle represents one day, not 1 hour, okay, or this 1 week or 1 minute. One candle means one day. Okay. The first thing that we are going to discuss here is the candle itself. Okay, this is very, very important. So the candle, the candle is a bearish doji candle. Okay, let me show you this thing. Okay, so in my final update, okay, I mentioned this thing that closing of the SP500 below. Sorry, no, this was the point number 6.a. The closing of the SP500 as bearish doji. Okay, means market is not expected to move up easily, okay, before it can test or retest. Man, now it has to test and retest before it can move up. So guys, see, this was the final update. So I give the final update at least 1 hour or minimum 1 hour before the closing of the entire stock market, so that my YouTube community members, okay, they can plan for the next day. Okay, similarly, okay, this the pre-market update. So I give this the pre-market update at least 1 hour, okay, before the open of the entire stock market, so that they can plan their trades, okay, for that day itself. Okay, and in the pre-market we discuss, okay, again this the like the probable movement of the S&P 500, okay, or the entire stock market. And accordingly, okay, means my YouTube community members, okay, they know very well in advance, like what is expected to happen, what they can expect in the stock market, okay, on that particular day through the pre-market. And through the final update, okay, they can expect, or they know like what is expected to happen the other day, the next day, okay, tomorrow. Now so the candle is the bearish doji candle. So number one, the first thing, okay, that it says that there was a rejection from 4185, right? Number two, it says that the SP500 failed to get this the momentum that it has gained, and it even closed below 4150 and 4160. Okay. Number three, that it says that it has formed a bearish doji. See, there would have been a doji, simple, a plain doji. Okay, what is a plain doji? Okay, plus. This is the plain doji. So if there would have been a plain doji, then that could have, or that might have helped the SP500 to move up easily. Okay, means generally doji means, okay, see what is, so what is this the doji candle? A doji candle means confusion, means clear. It is a clear case of confusion that the bulls and bears, they do not know like what to do, what should be there, okay, or whether means whether to take the SP500, or means whenever or wherever this that, okay, this the doji forms. Okay, so bulls and bears, okay, simply they do not know whether to take the stock, or that the index, or that the crypto, okay, bearish or bullish, okay, or that the commodity, right? So this simply indicates the confusion. So now what happens in the confusion? There comes a reversal. If a doji forms, okay, like here, somewhere around here, means a reversal. If it forms like somewhere around, okay, here, then possibly, okay, this kind of reversal. So doji, so this a doji candle, it generally represents a reversal. Okay, confusion means a reversal. Now if there would have been this kind of, okay, a normal doji, then definitely, okay, we would have expect, okay, or that the SP500 will be able to move up. Okay, but now in this case, the bearish doji has formed. So bearish doji simply means that that the SP500 tried hard, very, very hard, really very hard to stay above. Okay, however, it failed. It failed. Okay, this means that this means that whatever sentiments were, okay, these mean whatever bullish sentiments were there, okay, those bullish sentiments, okay, they were gone at the time of closing. Okay, and then there was, okay, this is the bearishness, okay, in the entire stock market. That is why we have seen this the doji candle, okay, here. Other than that, in the Dow Jones, we have seen, okay, again a bearish candle. In the Nasdaq, we have seen a bearish candle, okay, not exactly a bearish candle, okay, that is a bullish candle, but that bullish candle is supporting, okay, a bullish trend. However, again in the Nasdaq also, okay, the sentiments, okay, were gone at the time of closing, okay. As of now, this candle simply says that now the bullish sentiments that were there, okay, 1 2 3 days, okay, for now the bullish sentiments, they are not there, at least for now, at least for a day or two. Rather, the SP500 is expected to take a break, and that means that because of this, the bearishness, okay, on Monday we can expect that the SP500 will test or retest the 4100 or 4110, okay. Or even if it try to move up, then again, okay, it will find the resistance here, then again it is expected to test or retest, okay. So this is with this the candle, okay. Now the other technical indicators. So the other technical indicators, we have this, the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Bands and the median of the Bollinger Band, this means that the SP 500 is bullish through the Bollinger Bands. Number one. Number two, moving averages. Moving average is clear fan out supporting the bull trend. Secondly, closing of the SP500 is above all of these are moving averages. This means that the SP500 is clearly bullish through the moving averages, right? Then comes the Ichimoku cloud. Because the SP500 has closed above the Ichimoku cloud, this means that the SP500 is bullish through the Ichimoku cloud, right? Now let's talk about some other technical indicators. So the other technical indicators, we have the MACD. MACD is moving average convergence divergence. Okay. Now MACD is more than the signal. MACD is clearly more than the signal. Both are positive, indicating that the S&P 500 is clearly bearish through the MACD. Okay. Then comes the stochastic RSI. If you look into this, the stochastic RSI. Okay. So stochastic RSI, again, K is more than the D. K is more than the D. Okay. And it is clearly indicating that the S&P 500 is clearly bullish through the stochastic RSI. Then the directional divergence is normal, not a problem. Directional momentum is also supporting, okay, this is the bullish side, okay. However, okay, there was some loss in the momentum, okay, but it is still supporting this the bullish side, okay. And also, okay, there are no signs of this the saturation in, okay, on this the daily chart in case of the S&P 500. So now guys, what we have noticed is that the SP500 is clearly bullish through the Bollinger Bands. SP500 is clearly bullish through the moving averages, means EMA, exponential moving average. Then the S&P 500 is clearly bullish through the Ichimoku cloud. The SP500 is clearly bullish through the MACD. SP500 is clearly bullish through the stochastic RSI, and there is a directionally, okay, there is a bullish momentum in the SP500. This indicates that the SP500 is absolute bullish on the daily chart. Technically, again, this is technically, SP500 is technically 100% bullish on the daily chart. Okay, now you see, this says that 100% bullish, but this does not mean that immediately there will be back to back green and green and green, green and no. Okay, that is not the case. It is simply saying that because the SP500 is 100% bullish, okay, this means that the SP500 is clearly short term bullish. See, daily chart is for the short term, and the weekly chart is for the long term. So it is clearly saying that the SP500 is in the short term bullish trend. This means that even if there comes this the bearish candle, then also, and if the SP500 survives, then again it will resume its this is the bullish trend. This is the meaning of, okay, technically, okay, being absolute bullish. Okay, this does not mean that immediately upon, okay, like back to back. No. Okay, that is not the case. So this simply says that buy on dips only and only when the SP500 survives above the, okay, these are moving averages. That's okay, this is the case. So guys, this was the fourth point of the agenda, that is SP500 technical analysis on the daily chart, right? So we have seen that, okay, it is clearly bullish, absolute bullish, but not saturated. Remember, it is absolute bullish but not saturated, means it still has some there's the room, okay, in this the bullish side to move up, right? So this is what we are going to talk about in the last point of the agenda of this S&P 500 technical analysis. And now the final point, the fifth point of this agenda is the probable movement of the S&P 500 from February 6th, Monday, to February 10th, that is Friday. Let's see how the S&P 500 is going to move, behave, or react, okay, in this the coming week. So guys, once again, if you have not yet subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And guys, other than that, if you want to join my YouTube community in order to get these the daily updates, the daily analysis, then you can simply click on this the join button that is there, okay, just below the title of this video, and you will be able to join my YouTube community, and you will get the daily updates, the daily analysis of the SP500 from Monday through Friday, each and everything. Now guys, let's talk about the fifth and the last and the final point of the agenda, that is the probable movement of the SP500 from February 6th, that is Monday, to February 10th, that is Friday, right? So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And also you can join my YouTube community by clicking on the join button that is there just below the title of this video. Okay, so now the probable movement. So this is the probable movement, okay, as I have discussed in the point number 3, that is the support and resistance levels, and the point number 4, that is the technical analysis on the daily chart, SP500, okay, that there is a rejection, or there was a rejection from 4185. 4185, okay, a very heavy resistance, okay, historically, okay. So there is a rejection from 4185. Okay, this simply means that as of now, it is not that easy for the SP500 to breach and to move above the 4185, okay, like just one candle, okay, or so on, like 15 minutes or 1 hour or so. Means it is simply not easy. It is simply not easy. Okay, then what is expected to happen? Because of this, the bearish doji that has formed on Friday. Okay, so what we can expect is that on Monday, okay, irrespective of any open, okay, I'm not saying that there will be a gap up open or the gap down open. No, I'm simply saying that irrespective of any open, we can expect that the SP500 can retest, okay, 4100 to 4110, okay, around, okay, this means this particular support level, okay, 4100 to 4110, okay, or it can hover around. If it fails to retest, then also it can hover around, okay, this particular level, okay, or around these levels, etc. Okay, so this is what we can expect, right? Now it depends that what kind of candle forms on Monday, okay, again, but see, irrespective of any candle, when, okay, whether there comes, okay, this are reversal, so first it comes down, and then there is an intraday reversal, or if there forms a bearish candle or something. Okay, so as long as it is able to survive above 4100, irrespective of any kind of red or green candle, okay, as long as it is able to survive above 4100 in simple words, okay, it is expected to hold, and it has some good chances to move up. Okay, simple. If it is able to survive for like 1 or 2 days, okay, then it has better chances or good chances to further move up, right? Now, if for some reason, if it fails, see, next week, okay, this the geopolitical, okay, geopolitical news, okay, we are not expecting. Other than that, no major economic data. Other than that, no giant is going to post the earning. Other than, means in Dow Jones we have the CBS and the Disney, okay, who are going to post the earnings. But as of now, okay, but in case of the SP500 and Nasdaq, no giants are going to post the earnings. Okay, so this means that bullish help, okay, that would have been there. Okay, it is not expected to be seen, okay, next week. This means that yes, there are chances that it can breach and it can further come down, right? Now, whenever it comes down, okay, if it breaches the 4100, see, what we know is that if it is able to survive above 4100, then it's good. Then, okay, it has chances to move up, right? But if it fails, like Monday, okay, let's say Monday it survives, okay, but Tuesday it fails, okay, or like Wednesday, whenever it fails and it breaches and it closes below the 4100, then we can expect that first, okay, it is going to retest, okay, this is the zone of 4035, okay. So from 4100 to 4035, okay, in between we have 4065, okay, but that is this is not a very strong support, okay. So we can say that from 4100 to 4065 vacuum, from 4065 to 4035 again, okay, a vacuum. Okay, so then it can come and it can retest. Okay, this is the zone of 4035. Now the survival of SP500 is necessary. It is a must that it must survive above the zone of 4035, because if it fails, then it will be bad, because if it fails, then it can come down to 3990, and thereafter, okay, it will be coming down to 3800, back to 3800. Okay, that will be seen as bearish, because see, uh the press conference of the Fed chairman, so there were, okay, these are two outcomes. Okay, only two outcomes. Number one, that his tone was positive. Again, his tone, okay, so his tone was positive. Okay, he was kind of means happy, or he was kind of positive in his words. Okay, however, whatever he has said, whatever numbers he has presented, whatever he has committed, that was all negative, that was all bearish, that there will be further rate hikes, no rate cuts. Okay, long term, okay, this the economy, okay, will move into this the long term. Okay, there will be the slow growth, means so and so. Okay, these are the things, right? So his tone was positive, but whatever he has presented, numbers and everything, that was negative, right? So if the SP500 breaches, okay, this particular 4035, then in that case, okay, we must take, or we must exercise caution. We must exercise caution, because in that case, okay, this might be the resumption of the long term bearish trend, right? Which is why I'm saying that is survival above 4035, okay, it is very, very critical. Okay, it must survive above 4035. Okay, any failure, okay, above the 4035, then we have, okay, then we have the fours, there's the 3991. Okay, that is also okay, means 3991 can also give okay, this some support to the SP500. However, okay, again, means it will be simply seen as this the bearishness. Okay, that is the problem. Okay, so survival above 4035, okay, it is must. Below 4035, then there are chances that it can move down to at most, okay, to this the cloud itself, to this the Ichimoku cloud. Okay, that is around 3884. Okay, or yep, that is our level, 3884. Okay, now in the bullish side, if the SP500 is able to survive, okay, if the SP500 is able to survive, like on Monday and Tuesday, two consecutive survivals, okay, or two consecutive closings above 4100 on Monday and Tuesday, perfect, good. Okay, that is a relief. That is a relief. Okay, for the entire stock market, for the SP500. See, I'm not saying that there can't be, or there won't be any breach of 4100. There may be a breach of 4100, but if there comes an intraday reversal, it came down, but again an intraday reversal, in that case also, okay, we will look into the closing. Okay, and that will be good. If there comes a breach of 4100, it comes down to 4065 or something, and then there comes a reversal and closes above 4100, then it will be seen, okay, it will be seen like that the SP500 want to hold. SP500 don't want to give up that easily. That is the reason it came down, but intraday there was this a bullish reversal, and it closed back above 4100. Okay, this means, so if there comes like survival on Monday and Tuesday, then yes, we can expect, okay, a resumption, okay, of this bullish trend. But again, at first, now it has to struggle, or it has to first manage the 4150 to 4160. Immediately thereafter, we have the 4185. Okay, that is there, 4185. Okay, it has to then struggle, okay, here, okay, 4185. Okay, a breach of 4185, that's not a big deal, but a closing above 4185, that is the big deal. Okay, that is why we always focus on the closing. Okay, we are not focused about like intraday breach of this level, that level. No, we always focus on this the closing. Okay, so once there comes a closing above 4185, then only it can move to 4210. But again, then the 4210, okay, again a very, very strong resistance. Okay, then immediately thereafter, okay, this thing. So in short, okay, we can say that next week, okay, the situation that we have, okay, technical indicators, the movement, okay, etc. So next week, okay, uh the hit or the breach of 4291 is not possible. It seems not possible. Okay, until and unless there comes an exceptional news, okay, somewhere, okay, that we don't know. Okay, very good news, exceptionally good news. Okay, so other than that, okay, there are no chances that the SP500 is going to move away and going to breach the 4291. Okay, now 4291 is done. Now there are also not those heavy chances that it can move up and it can even breach and close above 4210. Okay, 4210, because see, as of now we are anticipating that first it will be coming down, okay, on Monday, Tuesday, etc. It will be coming down. Okay, then based on the survival of the SP500, okay, then only it will be allowed to move up. So first it has to survive, so it will consume like 1 or 2 days in the survival itself. Okay, then there will be Wednesday, Thursday, Friday. But if it consumes more days, okay, for this the survive means if it reaches 4100, comes down and closes below 4100, in that case, yes, 4210 is not possible in the next week. Okay, now if it breaches 4100 and closes below 4100, in that case even a closing above 4185 is not possible. Okay, means that it can breach, not a problem, but closing, again the closing, just like, okay, it failed here, okay, it can again fail here. Okay, so this is what I'm saying, that what is possible and what is not possible. Okay, so it all depends that how the SP500 performs on Monday and Tuesday. Its performance will decide its fate. Okay, so first, see, as of now SP500 is not concerned about going bullish. As of now SP500 is concerned about holding the ground. It has to hold the ground that it has gained. Okay, what ground? It was not supposed to breach 4100 or 4110, okay, that easily. Okay, but because of the press conference of the Fed chairman, it did. Okay, now it has to pay back, means it has to test, it has to retest, and it has to survive the 4100 and the 4110. Okay, so it's about the survival of the SP500 above this particular zone. Okay, 4100 to 4110. Okay, any failure of this zone, okay, will simply bring it back down to 4065, and then not just to 4065 but to the zone of 4035. Okay, so first it will try to survive because it will simply put all of its energy, okay, all of its momentum, everything in the survival itself. That is why the chances of going bullish are not, means there are, okay, but these are not much. Okay, so first it will put all of its energy, okay, into its survival. So once it is able to survive, okay, then only it can think about moving up. So first is about the survival, the second is about moving up. Okay, this is how this is going to work. Okay, not the other way around, that first it will move up and then it will survive. No, okay, first it has to hold, it has to survive. Okay, it has to sustain. So for once it has sustained, okay, then only it can think of moving up. But if it fails to sustain, then okay, then we know like what can happen and what is going to happen. And again, don't forget about, okay, this the reason that the tone of the Fed chairman, okay, it was positive, but the numbers he has presented and his commitment is bearish and his commitment is negative. Okay, so and guys, whatever will be happening, okay, the survival, not survival, etc., okay, these things, so I will update you, okay, through these the daily updates. Okay, if you are my YouTube community member, so from Monday through Friday, each and everything. Okay, so I will update you whether the SP500 is able to survive or not, or what we are expecting, okay, from the SP500. So if you have not yet joined my YouTube community, then you can simply join my YouTube community by clicking on this the join button that is there just below the title of the video. And once you have joined my YouTube community, then you'll be able to get, okay, all of these, the daily updates, the daily analysis of the SP500 from Monday through Friday, each and everything, right? So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And also guys, if you have liked this video, then please hit like. And also if you have any questions that you want to ask, then feel free to ask your question through the comment section and I will try to answer your questions. So guys, this was my S&P 500 weekly technical analysis for the week of February 6th, 2023. That is from February 6th, Monday, to February 10th, Friday.